So we will learn today. Am I audible? Hello?
Yes, sir.
Okay, okay. ठीक है तो we will or my screen is visible?
Yes, sir.
Okay, okay. So we will learn today about more some terminology about FNO, future and option. Okay. So
Okay.
first of all, especially in the option market, there are a few things. The first thing is in known as open interest. Okay. And second most important thing is volume. Okay. So there are some confusion between lots of student about volume and open interest. Okay. So when you go to the website of NSC or any other website, and if you observe the option chain here, so this is the option chain, and here you can see the data of calls and put, and here you can choose any index or stock, for example Nifty, Next Nifty, Fin Nifty, Bank Nifty, Midcap Nifty, and you can see the expiry. So tomorrow would be the expiry of Nifty, and it would be the monthly expiry of future contract as well. So tomorrow is 30th June. So weekly expiry, monthly expiry for all the stocks, along with the future contract of June will expire tomorrow. And from the 1st of July, you can see the July series will start. And उसकी जो expiry होगी that will be on 25th, I think, 28 July. Okay. So June contract will close tomorrow or expire tomorrow. Okay. So here you can see this is the data of Nifty today itself, and tomorrow would be the expiry, and this is the option chain. Here you can see the data of call, and here you can see the data of put, and these are the strike price you can see. So in the last class we have discussed about like different strike prices. These are the strike prices, and in the last class we also discussed about in the money, at the money, and out of money contracts. Okay, and here you can see this is the data. So here after in front of every like strike, you can see this is the data of 24,000, and right now market is trading at around 3,938, 180 point down. So here you can see the data of call. See the premium of this strike is 63 rupees multiplied by the lot size. Here you can see the data of volume, and here you can see the open interest. Okay, and this is the bid quantity and ask quantity. So what is the asking quantity and what is the bid quantity? People who are buying the or making this contract. The first thing is what I have discussed in the last class, that is the premium. The premium of every strike price is differ. Here you can see the premium of all the in the money contract is more, at the money is quite, and out of money contract have the lower premium, and in the money has the more premium or a higher premium. Okay, so the premium is made of two things. LTP the price is जो है, and also the premium has two component. One is time value, and other thing is intrinsic value. Okay, so intrinsic value means the actual value of the contract. So if you observe the in the money in the money strike price have time value as well as intrinsic value. So intrinsic value means if the market is expired today, so what will be the value of your strike price? So for example, if I say key market you have made the purchase of this strike price 23,950 and market is trading at this level. Okay. So what would be the actual value? Okay. So the first thing is intrinsic value. ठीक है, तो intrinsic value means like you can see here, intrinsic value is made of these two things, like what is the premium. For example, the strike price of this is 85 and here you can see the premium is increasing. It is 115, it is 148, it is 178. So first thing is known as time value. Time value means like all the out of money contract have only the time value. For example, if you see this thing, this is only the time value. So if the market is closed today, for example, if we assume that today is expiry and we have made a contract of this 24,000 strike price, then this and the market, if the market close below this level, at this level, which is the current market price, so this value will become zero. So that's why it is known as a time value, because it doesn't have any intrinsic value. But if you observe this thing, 23,900 strike price, so if you buy this particular strike price and the market is expired at 23,955, so it has the intrinsic value of 55 rupees. Okay. So intrinsic value means spot price minus strike price. So if you select the spot price, okay, that is 23955, 23955 minus the spot price, that is, oh, minus the strike price. For example, if I say this thing 23900, so this is my strike price. So if you minus this thing, you will get the premium of 55 rupees. This 55 rupees is the intrinsic value. So if I purchase a call of this strike price and the market is expired at this level, so I will get the benefit of 55 rupees. This 55 rupees is the actual value or intrinsic value of the strike price. But if you see at this level, here is the premium is 150, 115. So what is the additional amount? This additional amount is known as the time value. Okay. So if you, what is the time value? Time value is premium minus intrinsic value. So premium is 115 and if you minus 55, that is the this intrinsic value. So 115 minus 55, that will be the actual में time value. 115 minus 55 equal to this 60 rupees is actual the time value. Okay, that is time value. Okay, so in the money contract have intrinsic value as well as the time value as well. So this is the formula, like for to calculate the intrinsic value, spot price minus strike price will this, you will get this thing. This would be the intrinsic value, and if you subtract the intrinsic value from the total premium, you will get the time value. So in the money contract have the time value and intrinsic value as well, and at the money and out of money contract have only the time value, OTM and ATM. time value. That will be the time value. तो इंट्रेंसिक वैल्यू कैन नॉट बी नेगेटिव. ठीक है, एक और पॉइंट है यहाँ पर. इंट्रिंसिक वैल्यू कैन नॉट बी negative. So if I say like spot price minus the strike price, ठीक है. For example, if say market is trading around 23940, ठीक है, 23940 minus if I say this level, the this thing out of money. Okay. So it will be in the negative. ठीक है. So it cannot be negative. Intrinsic value cannot be negative. It should be positive only. Okay. So that's why all the out of money, for example, if I say the market is trading around 23940 and the strike price of this has the premium of 63 rupees. This 63 rupees is only the time value. It does not include the intrinsic value, because if the market today expire at this level, there would be no actual value. Okay? It would be on the negative side. So this 63 rupees, this 44 rupees, this 32 point, this 22 point, 15 point, 10 point, 7 point, it's all only the time value. Okay. So OTM and the ATM strike price have the time value. So if I say the strike price of this thing 24,000 has the premium, has the premium of 63 rupees. ठीक है, 63 points, sorry. So this is on the time value. So time value means if the expiry happen, so this point will become 0. Okay. So if you assume that today is the expiry and market is closing around 330, so at the 330, if market close at this level and if today is expiry and if we purchase this particular strike price, that value will become 0. So this is the time value, because the time has already completed, the time have finished, and whatever the strike price we are expecting that market will go up to that level, that cannot be possible, that cannot be done, it doesn't happen. So that's why this time value will become 0 and we will lose all this money. So for example, if we choose any of this strike price and the market close below this level, so tomorrow at the same time at 330, all this value will become 0. So I will show it tomorrow as well. Okay. So this is known as the intrinsic value and the time value. Okay. So I hope the concept is clear. Okay. Next thing is what we are going to learn today is that is the volume. Volume means in case of equity market, what the volume is? In case of equity means number of shares. Number of shares exchange hand. ठीक है, number of share exchange hand, it's called the volume in case of equity market. But here we are not purchasing the share, we are making the contracts. So, contracts. So number of contract number of contract that are open and close as well, means all the contract which are settled. Okay, that is known as the volume. And open interest means number of contract. Open interest means number of contract which are open but not settled yet. So contracts which are open but not settled are known as the open interest, because your interest, if you are a call buyer and if you make a contract on the long side, you buy a call and you still not close your position, that will become a open interest. So for example, there are two person one, here you can see there is a person known as A, and at the same time there is a person who is B. So you are buying a call, for example, I purchase a call of 24,000, call buy. At the same time, there is another person who is the call seller. So that person sold the call. Second person sold. Or we can say call writer. 24,000 strike price. Okay. So one person is the call buyer and second person is the call writer or call seller. They made a contract. Okay. So that the volume would be 1 in this case. Okay. So this person has paid the premium of 63 rupees and this person has received the premium of 63 rupees. So this person has paid the premium to A, person paid the premium to B. So that will become the volume. The volume would be 1, and same way the open interest would also be 1. In this case, open interest would be 1 and volume would also be 1. Okay. And for example, after 1 day maybe, okay. So for example, if I say day second, okay, on day second, there is another person. For example, A wanted to sell, but B don't want it to buy. So there is another person, person C. C comes in the market, okay, and he buy the same strike price. Person C buy the call of 24,000, okay, and here here the person A will become the seller, okay. Person A will be seller or call writer. So A wanted to close his position, but B don't want it to buy. So there is a third person, person C. He comes in the market and he buy the call of 24,000 from person A. Okay, and person A is the call writer and he is selling his contract. He wanted to close his position. So for example, market is trading around, right now is trading at 70. Okay, so he is making a profit of 7 rupees. Okay, or 7 point. Okay, or we can call it, for example, if the market is around 71, is not a problem. Okay, so he's making a profit of 7 rupees. 7 rupees means 7 multiplied by the 65, for example, multiplied by the lot size. So he's making the profit of 7 rupees or 7 point. So now the person A would be the seller and person A would be the buyer. So he will buy at the rate of 70 multiplied by 65 and he's buying from person A. In this case, the volume would be 1 because a fresh buyer comes in the market, okay, but there is not a fresh seller. The person A, existing seller, is closing his position. So in this case, volume would be 1 and open interest OI would not increase. It will remain the same. Open interest will remain the same. It is not increasing. Okay. Next day, for example, on day 3, उठा लो. On day 3, for example, maybe uh, there is another person, for example, person D, and there is another person, person E. Okay. For example, person D comes in the market and person E also come in the market. Person A would like to buy any other strike price, for example, 2, 3, 500 strike price, and he want to buy the 5 contract, 5 calls of 23,500 strike price, and at the same time this person is selling. So he is the buyer and he is the seller. He is buying 5 calls and he is selling the 5 calls. Okay. In this case, volume would be 5 and open interest will be 6, because 1 was already there and open interest would be 6 now, because two no new buyer comes in the market, one new buyer and one new seller come in the market, and they buy a fresh contract, 5 fresh contract in the market. Okay. So open interest is increased by 5. Earlier it was 1, now it will become 6. And because 5 new contract added today, the volume would be 5. Okay. So one important thing is to learn is that volume change every day, but open interest is carry forward every day. So if it is a 1 month contract, if it is a 7 day contract, if it is a monthly contract, or it would be a weekly contract, so वॉल्यूम जो है वो हर रोज अपडेट होगा, इट विल रिफ्रेश every day. But open interest is carry forward until or unless the option contract doesn't expire. Okay. So in the same manner, open interest will increase or decrease. For example, day 4. On day 4, what happen if on day 4 person A जो था, he was the buyer and he was the seller. uh, Person D would be the buyer in this case. Okay, on day 4, what happened? Another person is coming. Person F is coming. Person F is coming. Okay, and person D is wanted to sell his position. Okay, he wanted, earlier he was the buyer, now he will become the seller. So person D would like to sell 5 contract. Okay, and person F want to buy. So now in this case, this person D is closing his position. He is selling his 5 contract, whatever he buy. And the person F is the new buyer. So person D is selling his strike price, for example, at the same, the 5 contract. Okay. He is selling 5 contracts. And person F is buying 5 contracts. Okay. In this case, he is the new buyer. Person F is the new buyer. Person F is the new buyer and person D is the existing seller. So he is selling his 5 contract and he is buying his 5 lot. He is buying his 5 lot. Okay. So open interest will, volume would be 5 again. Volume would be 5 and open interest will not increase. It will remain the same. Okay. So OI would be 6 again. Okay, so it has not changed, it has remained the same. Okay, you can see it has remained the same. Now what happened again on the day 5? If I say on day 5, okay, what happened, the person B, okay, person B would like to buy now, he want to close his position. Okay, this is strike price. Person B wanted to buy now, he wanted to buy now. Okay, so for example, 1 day, 3 day, 4 day already spent, and he wanted to close his position. So earlier he was a seller, now he'll become the buyer. So person B would like to buy, strike price of 24,000. Okay, he wanted to close his position and he wanted to buy. So another person would be selling. Maybe there is a fresh seller coming in the market. Okay, and if I say like person G, okay, or what we can say ki another person may be there. So it may possible कि already an existing person would like to buy, or it can be a fresh, it can be a fresh seller as well. Okay, so if there is a fresh seller, so for example, if I say there is a person G, ठीक है, person G would like to sell and person B would like to buy. Okay, one lot. Okay, in this case the person is closing his position. Okay, and the person G is selling. Okay, so in this case open interest will also remain the same because an already existing person is closing his position and there is a fresh person, but the seller is the previous one, he is not the fresh one. So still the new contract is not being made. Okay, already existing trade was exchanging hand. So in case the volume would be again 1 at this time, and OI will also remain the same, 6. Now what happened in case these two position, these two person wanted to close his position, for example, on the day 6. Now the day 6 has come and today is the expiry. Now person F wanted to sell and person D would like to buy. Okay, so in this case person F and person D would like to close their position. He is also closing his contract. He is also closing this contract. He is the buyer. He wanted to sell. He is the seller. He would like to buy. In this case, he is selling and will become the buyer. And volume would be 5 and open interest now will become -5. Okay. So OI would be 6 minus 5. Sorry, 6 minus 5 would be 1. So if the existing person are closing their contract, they are settling their contract, they are square off their position, the open interest will decrease. If the new person come in the market, or two new buyer or two new seller or multiple buyer or multiple seller are coming in the market, open interest will increase. So this is the combination of open interest and volume, open interest and volume. Now according to this concept, what happened, we can decide that market is going up or down. So there are few concept which is known as long build up, short build up, long unwinding, and short covering. So this thing apply on future market as well and options as well. that is short covering. Okay, so if you see, there is a combination of open interest along with the price. Okay, so if in case अगर हम बात करें, यहाँ पर हम लिख देते हैं OI, and here we can see the price. Okay, in case open interest is increasing along with the price is increasing. Okay, increase in open interest along with increase in the price. Increase open interest and increase in price means long position are being built up. That is a bullish sign. That is a bullish signal. Means people are bullish about the market. Okay, so this is known as long build up, means long position are being built up. तो ओपन इंटरेस्ट जो है वो भी बढ़ रहा है एंड प्राइस जो है वो भी बढ़ रहा है. ठीक है, मीन्स बायर आर मोर अग्रेसिव. दे आर मोर अग्रेसिव डिस्पाइट ऑफ द प्राइस इंक्रीजिंग. people are making fresh position on the longer side, on the bullish side. So that is a bullish side or bullish signal. In case of second thing is that in case of open interest is decreasing, open interest is decreasing and price is also decreasing. Okay, it means कि people are booking there. ठीक है, पहले हम यहाँ पे लिखते हैं. ठीक है, decrease. Okay, so in case of decrease in open interest along with decrease in the price means people are booking their position. So whoever the made his position at this point and the market has reached up to that level, so that means they are booking their profit and market is now overbought. So they are making their profit and they are existing their contract. That means open interest is decreasing. So we have seen here when the person close his position, open interest decrease. See, the person are closing their position because the market is not going up now. So it's time to book their profit and we can exit from the market. So that thing is known as long unwinding. People are unwinding their position. Okay. तो वो क्या नाम है, लॉन्ग अनवाइंडिंग इज अ bearish sign, means that is a bearish signal now. Now market is overbought and it's time to book your profit. Okay, so that is a bearish signal. Okay, third thing is known as short build-up. Short build-up means increase in open interest and decrease in price. Increase in open interest along with decrease in the price. ओके, तो प्राइस तो नीचे जा रहा है बट ओपन इंटरेस्ट बढ़ रहा है. तो ये कैसे पॉसिबल हो सकता है? व्हेन द पीपल आर bearish about the market. Okay, so people are now seller are more active. Here we can say seller are more active or aggressive, you can say, and market is falling down, so that is a bearish signal. Okay, so market is coming down and people are making position on the shorter side. People are doing the short selling, or they are buying the more put, or you can say they are selling their future contract, or they are more buying the put, or they are doing the call writing. All these things can be possible. So that means market is on the lower side, on the bearish sides. So open interest is increasing and the price is डिक्रीजिंग. प्राइस नीचे जा रहा है और लोगों का इंटरेस्ट बढ़ रहा है. तो लोगों का इंटरेस्ट किस साइड में बढ़ रहा है? शॉर्ट सेलिंग में. दे आर मेकिंग देयर शॉर्ट पोजीशन. एंड when the market is become oversold, in this case now market is now oversold. Okay, so what will happen? Decrease in open interest and increase in price. Okay, fourth combination can be decrease in open interest and increase in the price. Okay, so that is known as short covering. So market is now oversold and market is reach up to a certain level, and people now believe that there is a good supply zone there or can be a good support area at this particular point. So market is now don't want it to fall further. In this case, there is a chance that market will recover from that a particular level. So people are decreasing or they are unwinding their short position. Okay, so price is increasing now and open interest is decreasing. So that is known as short covering. So these are the four concepts. According to that, we can make our positions. So first thing is, when the market is bullish about that, people are bullish about the market and they are making the fresh position on the buyer side. They are making the long position. When the market is reach up to a certain level and it's time to book your profit, so that long unwinding happen. When the more seller are in the market as compared to buyer, then market goes up to in the bearish zone and short building started at that particular time. And when all the person who buy their short position, when they cover their shorts or when they do the profit booking on the seller side, then market will also uh, also reverse from that particular level. Okay, so here you can see like on this particular uh, website and in the market data, here is a derivative section and change in the open interest here. So you can click on this particular link and same thing you can see here. So if you click on this particular tab, change in open interest, and select this drop down, first thing is rise in open interest and rise in the price. So we can choose these stock which are rise in today, that means increase on open interest and increase in increase in price. So if you click on this thing, you will get a filter, and here you can see these are the contract are on which people are on the bullish side today. Okay, so these are the different stock like HDFC, Nifty, these are the Nifty contract, NTPC, Bajaj Finance, and so on. Okay, so this is the date of today itself. Okay, so here you can see this is stock future, this is index option. So this is a future contract of HDFC Bank expiring on 28th of July, and you can see this is the open interest. This is the open interest of 25th June. This is the change in open interest. This is the percentage of change in open interest. This is the LTP. This is the previous close, change in LTP and value. This is the volume. And this is the underlying price, the price of underlying asset. So here you can
Sir,
see, yes,
a small doubt, sir.
yes, tell me.
Here you said long build up and long unwinding
Yes,
will be taking place in call side, sir, or it can also take place in put side also, sir.
yes, it can be on the put side as well. See what happen. For example, if you buy a future contract, okay, and
Okay. sir,
and now you believe that market is now on a certain level
sir.
and your target is already done. Okay, so when you close your position, it will become the long unwinding. It
Okay.
can be in case of future as well. It can be in case of call, right, call buying as well. If you are a call buyer at a certain time, when you
Okay, sir.
when the price is already
Sir,
reach at a certain level. Okay, so here you can see these are the increase in open interest, increase in price, increase in open interest,
sir,
and yes,
sir, small doubt, sir, here.
yes,
Long unwinding, long build-up will only form on call side, or it can also be there on put side also, sir.
yeah, it
Both
can be,
sides can it take place,
yes,
sir?
yes,
These
yes.
two.
Whenever you see that the market has gone up to a certain level, it's time to booking your profit. For example, if
Okay,
you are a put seller,
okay,
okay, or if you are a put buyer,
okay,
okay,
sir.
so when you close your position, it will
Yes,
be
sir.
a long unwinding. Okay,
Sir,
now you can see these are the four combination:
long
increase in
unwinding.
open interest, increase in price, rise
Yes,
in open interest, and decrease in price, slide in open interest and slide in price, and rise in open
okay,
interest and
sir.
rise in price. This thing is also available on the money control.
Okay,
Okay, here you can see on the money control website. It is
okay.
or in a better way.
Sir, in option, open in option uh, open interest, should we see out of the money strike prices or in the money strike prices on call side and put side, sir? Which one do we need to check? Short unwinding, short build up, or long unwinding, long build up.
Yes,
All these
that
things we have to check out of the money strike prices or
no, no, no.
in the
All
money
the
strike
strike price.
prices, sir.
It is based on the all the strike price. For example, uh, if you go to option chain again, okay, that is the upcoming topic.
Sir.
Okay, so here you can see all the data
Okay.
of the option contract or all the strike price. Okay, so here on the option chain. Okay, so this is the money control website. आयरा, आयरा, आवाज नहीं आ रही। फोन कहाँ है? दादी का। वहीं पे रख दे, वहीं पे आवाज सिग्नल नहीं आ रहा, वहीं रख, दरवाजा खुला रहने दे। Okay, here you can see increase in open interest and increase in price, decrease in open interest, all the combination. Okay, so increase in open interest along with increase in price mostly indicate long position are being built up. Okay, so if you go on this particular website, here you can see the filter. Okay, you can apply another filter. You can see all the option contract, all the index future contract, all the stock future contract, all the index option contract, all the stock option contract, and you can choose the expiry as well. So if you would like to see the expiry of today, this month only, we can select this thing, and here you can filter. Okay, so if I apply this particular filter, I can see the contract of this month only. Okay, and now you can see these are the different contracts. Okay, So Yes Bank is there, Eternal is there, Power Grid are there, BEL is there, NTPC is there, HDFC Bank is there, and so on. And if I see only the future contract, all the future contract or all the option contract, so I can choose all the stock future contract. Okay. So if I choose all the stock future contract, I'll see all the contract of stock future which are popular today or which has more liquidity today, or we can see actively people are trading these contract. So if you go to trading view and see the chart of this particular these stock, so on every morning you can choose this stock, and according to that you can make your position in the same stocks. There is some problem with the internet. Ira!
Sir, voice is breaking, sir. Net may be
इधर
little
आ
bit slow. Okay. Sir, the next combinations of this no, sir.
फोन कहाँ रखा तूने चल क्यों नहीं रहा वो
Okay. Yes.
yeah there is some problem with the internet yes let me just wait
Okay. Sir, in the next class, we will see the combinations of these on call side and put side, no, sir. Sir, sir, voice is breaking, sir.
okay okay now you can see here
Yes, sir.
so if we go to this particular link here and now I have applied this filter and only I would like to see the future contract of this expiry. So you can see Yes Bank is there, Eternal is there, Power Grid is there, BL is there. We can choose any of this stock, for example, Eternal. And if I go to trading view and see the chart of this particular share today only, Eternal Limited. Okay. See, you can see this is the today position. Okay. So people, you can see there is a gap up in the stock. Yesterday the market closed at this level and there is a gap up. Market open at this level, it become the high today and this is the low today and market is trading at this level. Market is already closed today. Okay. So this is the position of today. Okay. So there is a gap up at the stock. Okay. So this it means people purchase at this level and market goes up to this level and then it come again here and here as well. And if we see another stock like HDFC Bank today, okay. So it means people have made the position in this particular stock today. That's why you can see again. So this is the time of expiry. Okay. So when the new expiry start, for example, if I say on the of the July month, so whatever the stock are there, you can choose for the buying. Same thing, you can see the stock open increase in open interest and decrease in price. Decrease in open interest, increase in open interest and decrease in price. Okay, so if I choose this increase in open interest and decrease in price means I can select the stock which are on the bearish side, short side. Okay, so we can choose these stock for sale. ICICI Bank, Bharti Airtel, Tata Power, or NGC.
Sir, all these things we will check at the starting of the market hours, sir, or at what time we should check this?
You can see in the morning as well, and here you can see these are the stock.
Morning at 9:30 or
Uh,
10:30, sir?
Anytime after 9:15 when the market is open,
Okay.
let the
Okay.
market settle for 15 or 30 minutes. After that, you
Okay.
can choose. Okay, and if you are making a, you can see a contract for a longer time, if you are not
Sir.
going for intraday, then you can see that if the open interest is regularly basis के ऊपर अगर वो increase हो रहा है, that means you can go for the longer time as well. You can wait for the
Okay, sir.
uh, few more days as well. Okay.
Okay, sir.
So here you can see the combination of like all these data, like here, okay, change in open interest and change in price. Now, for example, if I choose this thing like uh, same thing, rise in open interest and rise in price, so you can see SGFC, same thing, Nifty put, the put of Nifty, 93, 23,950. People are buying this particular strike price 23,950, 23,900 put, 24,000 put. These are the more liquidity here as well. So that means people are bearish about the market. That's why they are making the position and this particular strike price.
Yes.
Okay. Now again, if here we can see the data of future as well. So if I see like any particular stock like HDFC, you can choose HDFC as well here.
Sir, sir, tomorrow topic will be combinations of these long build up, short build up on call side and put side. That you will teach the tomorrow class
Yes,
topic.
yes, okay. So this is the derivative here, okay.
Okay.
And if I click here, now these are the particular active call of this particular stock, SGFC.
Okay.
These are the most active put, and you can see most active contract by OI. These are the according to the open interest. You can see
Okay.
the July future, the June future, and 28 July 800 call. Market is at this particular price, and people are buying the call of 800. Future August के future भी people are interested, and 800 call 30th June. Okay, so people are interested in these contract. These are the most active strike price or future contract for the July and the June month as well. Now here you can see the historical data. This is the historical data of that particular stock. So if I select here SDFC, and if I choose the stock future only and choose the expiry as well, choose the year as well, and I'm looking for the future only. So I can see the date of 1 week. Okay, this thing can be checked on the very first week of the expiry, maybe tomorrow when the June expiry will expire. So we can go at this particular time and see the strike price. Oh, see the date of 1 week. And if you filter out this thing, here you can see the value along with the open interest column. Now here you can see this is the column of open interest and this is the price. Now if you observe this thing here, what will happen? You can see the change in open interest, okay, at this particular day. This is the change in open interest. Now again here you can see the change in open interest. So on this particular day, people have square of their position. There is a decrease in the open interest and decrease in the price. Okay. Now if you observe this thing from the, you can see the data of 1 week, you can see the data of 1 month, You can see the data of 7 days, 1 week, whatever you want. Now you can see these are the total number of contract here, open interest and the change in open interest. Now whatever I have told you,
sir.
this is the total number of contract and number of contract which are increased, and
Increase.
this is the price 795 on this particular day. Or
Sir, one doubt, sir. When we are trading with any strike price on put side or call side, we should check underlying asset chart or strike price option chart.
see, it's
Can we
all.
apply? Can we
You can
apply
you can
all the
apply the
indicators?
both thing as well. Okay,
Okay, sir.
in the lots of broker have the similar kind of option. They have
Okay.
multiple screen. Here you can
Yes,
see the
sir.
price of underlying as well. You can see
Yes,
the price of future chart as well, and you can
yes, sir.
select the price of that particular strike price as well. So here
Means
you can
we
see,
can we
you
can
can see,
apply indicators and even to set up stop losses or to follow candlestick pattern. Also, we can apply on
yes, everything you can apply.
option
Yes, you can apply on the
option chart.
option chart itself. Okay.
Okay.
Now here you can see what I wanted to tell you was that it was the price and this was the open interest.
Okay, sir.
And on the next day, what happened? The price is decreasing.
Yes,
So the open interest is also decreasing.
yes,
Okay.
sir.
So decrease in open interest and decrease in price means
Long
people are,
unwinding.
yes, exactly. Okay. Next day, what happened? Price is increasing and open interest is increasing.
That is
Long
long
build
build
up
up.
again. Okay. Next day, what happened? So people are here, they are long unwinding. Next day, long build up again. Next
Yes,
day,
sir.
what happened? Increase in open interest and decrease in price. You can
That
see.
is short covering.
Yes. Okay. Now what next day what
No, no,
happened?
short build up, no, sir.
Uh,
That is short build
yes. Next day what happened?
up.
784, 775. Price is decreasing and open interest is also decreasing. Decrease in
Okay.
open interest and decrease in price. Again, long
It
unwinding.
is long unwinding.
Next day what happened again? Market is, oh, price is increasing by 4 rupees and open interest is also
Yes.
increase.
This is
Okay.
in futures, no, sir. What
Yeah,
we are
this is the
discussing.
future contract of this particular July
Okay.
series. Okay. Next, what happened? Also, price is increasing, open interest is increasing. Again, there is a sign of long build-up. Okay. Next
Okay.
day, again, price is decreasing and open interest is decreasing. So again, profit booking. So what happened? People are buying their contract on the very next day. They close their position or book their profit. The
Yes,
market
sir.
is not certain because there is not much certainty in the market. Okay.
Yes, sir. Yes,
Now next day what happened again? Price is also increasing. Open interest is increasing. Again long build up. Price increasing. Open interest increasing.
yes, sir.
Now here
With
you can see
one
again.
information, we can understand it is whether the price is bullish or bearish.
Yes.
Or so, whereas in options, we have to consider call side and put side. Both with these two combinations only, we can decide
Yes. We can decide.
how is it bullish or
Yes.
bearish
So for
of the
example, if we
particular
say,
stock.
yeah, if I see HDFC Bank today itself,
Yes.
okay. So this is the chart of today. Okay.
Okay.
What happened this? Okay. So because we are looking for July future, okay.
Yes.
Now if you see the 15-minute chart, so this is the data of today. Market open at this level, goes up to this level, and close around this level at the nearest forward the same. So what happen if you go and see the daily chart as well? Now you can see someday you can see these are the green candles, and someday you
Yes.
can see these are the red candle.
Yes.
Okay. So when the people are on the bullish side, you can see there would be the green candle. Okay, you can see date advice as well. So if
Yes.
I say whenever you can see there is a long build up, okay,
The
you will
price
see a
goes up.
yes, okay. So for example, if I say the 22nd June, okay, this is 22nd June, and
Yes.
again this is the 23rd June, 24th June, 5th June, and 6th June. Okay. So in the same manner, what you can do, you can see the option chart as well. You can select the options. You can select the year and expiry. So we have seen this expiry as well. Now you can see the call and put. So you can filter the data according to the call and put. Okay.
Yes.
So which strike price are more popular? So this would be these are the strike price. Strike price of 765, 730, 840, 830, 860. These are the active strikes.
Yes.
And we can see the data of that particular strike
Okay.
price as well. Change in open interest and again same thing.
But if we see stock option historical data, stock futures, we can understand what is happening in the real stock,
Yes,
because if it is long build up that day, price will go up, or if there is any short covering, will
yes,
there
yes,
will be an range bound
yes, exactly.
increase in price,
Yes,
that we
yes,
can understand, sir.
yes, exactly. Now, whatever you are asking about that, so we can go here
Sir.
and this is the option chain. Okay. And this is the total open interest of all the strike price
Yes,
of the
sir.
call side and total open interest of the put side.
Okay.
Now, this is known as,
PCR ratio.
yes, put call ratio. So this is the total open interest of put side and total open interest of call side. So that is the put call ratio. So some people see the total open interest of all the strike price, and some people only see the data of
Nearest,
nearest strike price, the nearest
nearest
4 to
right,
5
right.
strike price only.
Yes,
Okay, and according to that, they make their positions.
yes, sir. If
Okay,
it is more than one, it is
yes,
bullish. If it is less than, this is bearish.
yes, exactly. Okay, so that is
Right.
called as the put call ratio.
But if you observe long build up or short build up or long unwinding, short covering on both, see we should see the combinations of what is happening there on call side and put side,
Exactly,
which is happening. Then only we can decide how the stock or particular index will go up or not,
exactly.
isn't
So
it,
we
sir?
can see we have to combine the both data. We can see the chart of it as well,
Yes,
whatever
yes,
the
sir.
stock is moving in which direction, and along with the data of derivative data. Now we can
Yeah,
see the, yeah,
call side, put side, what is happening there, short build up or long build up or any,
exactly.
what
So
are the combinations there on call side and put side,
right, right.
that we can understand.
So right now, if I see the data of today as well, the Nifty, this is the Nifty, and market is trading at this particular level, 23,945. And
Yes,
if you
sir.
see the open interest of this particular
This
strike
is
price of,
bearish, sir.
yes, okay. Now we can see 24,000. You can see the total open interest is 2 lakh, around
Right.
2 lakh open interest on the put side, and we can see 2 lakh 99,000, more than 2 lakh.
Yes, sir.
It's around 3 lakh. So 3
That is
lakh
bearish.
people are there who are on the call side.
Call side,
That's
shorting.
why market is not above this particular level. We
Call side
mainly assume
shorting.
that people are writing their position. They have
Yes, sir.
write their particular strike price.
Yes, sir.
That's why the market has not crossed above this level.
24,000.
And that's why the market is bearish.
Yes, sir.
So this is the data. Now you can see the chart of Nifty as well. So most
Yes,
of the time in intraday itself, the price is not able to cross this particular
cross. Yes, sir.
level.
Yes,
Maybe
sir.
on the intraday or maybe on.
For every half an hour, if we check change in open interest, then we can understand how the market is behaving. No, sir.
Yes, exactly. Now you can see after 12 o'clock, you can see market has not been able to cross
Sustain,
24,000 level.
sustain that level, sir.
Okay. So this is the data after 12:30.
Yes, sir.
You can see market has not crossed up to 24,000 level.
Yes,
The
sir.
highest point is 23,987.
Yes, sir.
Okay. In the morning, it was around 24,100, and you can see according to the time, the price is also decreasing, and so
Yes,
as the price is not above this particular level. So
yes,
that's why we can see the data of this strike price like 24,000. So more people are, you can see change in open interest. Okay, now you can see change in open interest. The open interest is increasing and price is decreasing. So that's why most of the people are bearish about that market.
yes,
This
sir.
is the main reason. Okay,
Short build.
yes. So that's why the price is going down and Nifty is down by 100 point.
Okay.
Catches.
Thank you.
Okay.
Sir,
So
next class will be on tomorrow, sir.
yeah, we'll continue tomorrow with the class.
Okay, sir.
Okay.
So last class video is not uploaded,
Yeah,
sir.
I am uploading it because there is some
Okay.
problem with the internet as well.
Okay, okay,
So I
sir.
will upload it. Okay.
If you can upload in your YouTube channel, I will.
Yes. Okay. Okay. I'll
See.
upload that.
Thank you, sir.
ठीक है